Greetings, members one and all of the Salivation Nation. The way out for a world economy hooked on debt? The answer is quite clear, is it not? That is more debt. Let's explore. This is an article in the economics section of Bloomberg, and it was shared with me by Bead Demon. And I think it is quite telling. We're going to take a look at debt, which is something that many of us in this community do talk about, and how precious metals can really help us to be more disciplined in our everyday lives to avoid and getting into debt. Zombie companies in China, crippling student bills in America, sky-high mortgages in Australia, another default scare in Australia. So there's a decade of easy money has left the world with a record $250 trillion of government, corporate, and household debt. That's almost 3 times global economic output and equates to about $32,500 for every man, woman, and child on Earth. You know, we did look at the U.S. debt clock, and that's been perused through many times to give you an idea of what the average American debt is. But we're going to take a look and see how this is in relation to overall global debt. But I think this does say something about the world as a whole is moving in a direction which is not good, that will come back to bite not only us in this country, but around the world. It already has in some ways. So here we see the new record. Some of the data here is quite telling. We have in red private non-sector, and blue here for general government, and financial sector, and the projected debt accumulation for the second half of 2019. We can see here how much in the private sector around the world there is. That is quite telling. And in any case, it has been the largest piece of these pie charts. But you can see here how much it's just exponentially getting larger and larger. Much of that legacy stems from policymakers' deliberate efforts to use borrowing to keep the global economy afloat in the wake of the financial crisis. Boy, isn't that the truth? Predatory lending and, of course, money creation as well, too. Rock bottom interest rates in the years since has kept the burden manageable for most, allowing the debt mountain to keep growing. Now, as policymakers grapple with the slowest growth since the era, the suite of options on how to revive their economies share a common denominator, yet more debt. From Green New Deals to modern monetary theory, which basically is the same old, it's just a new name on an old method of Keynesian policies of printing money and stimulus, essentially from central planners and governments. Proponents of deficit spending argue central banks are exhausted and the massive fiscal spending is needed to yank companies and households out of their funk. Fiscal hawks argue such proposals will merely sow the seeds for more trouble, but the needle seems to be shifting on how much debt an economy can safely carry. And I think that is quite telling, because many of us were surprised that we were able to even survive the last round of quantitative easing for as long as we have. And here, this quick take by Bloomberg on Twitter says, more than a decade after the financial crisis, the amount of combined global government, corporate, and household debt has reached $250 trillion. One solution proposed by policymakers, more debt. Central bankers and policymakers, from European Central Bank President Christine Lagarde to the International Monetary Fund, have been urging governments to do more, arguing it's a good time to borrow for projects that will reap economic dividends. Previous conventional wisdom about advanced economy speed limits regarding debt to GDP ratios may be changing, said Mark Sobel, a former U.S. Treasury and International Monetary Fund official. Given lower interest bills and markets' pent-up demand for safe assets, major advanced economies may well be able to sustain higher debt loads. I think they've been kind of emboldened about what happened after the bailouts and after the multiple rounds of quantitative easing. A lot of that money, by the way, had been sent overseas and really has not done a whole lot to really spur the economic growth. Certainly less than what naturally could have occurred if you allowed the free market to take over. So rising expectations of fiscal stimulus measures across the globe have contributed to a pickup in bond yields, spurred by signs of bottoming in the world's economic slowdown. 10-year Treasury yields climbed back above 1.80% Monday. This article is a couple of days old, while the Japanese counterparts edged up closer to zero. A constraint for policymakers, though, is a legacy of past spending as pockets of credit stress glitter the globe. On the sovereign level, Argentina's newly elected government has promised to renegotiate a record $56 billion credit line with the International Monetary Fund, stoking memories of the nation's economic collapse and debt default in 2001. Turkey, South Africa, and others have also had scares. And here we can see the hooked on debt from financial corporates, non-financial corporates, government, and household. Look at that. As for the corporate debt, American companies alone account for around 70% of this year's total corporate defaults, even amid a record economic expansion. And in China, companies defaulting in the onshore market are likely to hit a record next year, according to S&P Global Ratings. So-called zombie companies, firms that are unable to cover debt servicing costs from operating profits over an extended period and have muted growth prospects, have risen to around 6% of non-financial listed shares in advanced economies, a multi-decade high according to the Bank for International Settlements, which is the central bank of central banks. That hurts both healthier competitors and productivity. As for households, Australia and South Korea rank among the most indebted. The debt drag is hanging over the next generation of workers, too. In the U.S., students now owe $1.5 trillion in debt and are struggling to pay it off. Even if debt is cheap, it can be tough to escape once the load gets too heavy. While solid economic growth is the easiest way out, that isn't always forthcoming. Instead, policymakers have to navigate balances and trade-offs between austerity, financial repression, where savers subsidize borrowers, and default and debt forgiveness. The best is to grow out of it gradually and consistently, and it is the solution to many, but not all, episodes of current indebtedness, said Mohammed El-Erain, Chief Economic Advisor to Alliance SE. And this is where we get into gunning for growth. They're betting on it with this increased debt. Policymakers are plowing on for the hope of such an outcome. To shore up the U.S. Treasury, U.S. recovery, the Federal Reserve lowered interest rates 3 times this year, even as a tax cut-funded fiscal stimulus sends the nation's deficit towards 5% of GDP. Japan is mulling fresh spending, while monetary policy remains ultra-easy. And in what's described as Britain's most consequential election in decades, both major parties have promised a return to public spending levels last seen in the 1970s. China is holding the line for now as it tries to keep a lid on debt with a drip feed of liquidity injections rather than all-out monetary easing. On the fiscal front, it has cut taxes and brought forward bond sale quotas rather than resort to spending binges seen in past cycles. So that's good. And Bloomberg's economists say that when a slump does come, as it surely will, monetary policy won't have all the answers. Fiscal policy will contribute, but with limitations. And terminal clients and, as global investors get accustomed to a world debt in the red, they have repriced risk, with some arguing it is only inflating a bubble. Around $12 trillion of bonds have negative yields. Now, I will say that as they continue to try to press for this, the selling point, the return on investment, is if you borrow money and that money, it stimulates the economy, you can pay it back and profit from it, and therefore it's worth it to borrow. And that is true to some extent, but we've taken it into overdrive as we saw the charts above there. With central banks at their lowest level and U.S. Treasuries at their highest richest valuations in 100 years, we appear to be close to bubble territory. But we don't know how or when this bubble will burst. And that's the thing. I thought it was going to happen a while ago. And that bubble bursting will manifest itself in a reinventing of the dollar, a reset of the dollar as part of it. The IMF in October said lower yields are spurring investors such as insurance companies and pension funds to invest in riskier and less liquid securities as they seek higher returns. Debt is not a problem as long as it's sustainable, said Alicia Garcia Hero, chief Asia-Pacific economist at Natixia SA in Hong Kong, who previously worked with the European Central Bank and Bank of Spain. The issue is whether the massive generation of debt since the global financial crisis is going to turn out to be profitable, and that's kind of based on what I was talking about before. Bottom line is this, folks, is that we can continue, as Greenspan once said, we can continue to keep printing money as long as people have faith in it. It's paraphrasing it. And we can continue to have debt as long as people ignore it. That's really what's happening. It's sustainable right now. The debt is sustainable. It's continuing to grow, but it's become less and less of a talking point in political discussions here in the United States and around the world in some cases because, well, it's just there. It looms. And it makes you wonder if they can erase it. I think there'll be something will happen with the debt, I believe, when they reset the dollar. And which will essentially make it more manageable or seem like it when they revalue the dollar. Whatever happens, I believe that if there is a revaluation of the dollar or reset of the dollar to tackle some of this, and to bring us back to some sort of new standard, which may or may not involve gold or any rules to back it. When we hold gold and silver, we are going to be revalued too. It's going to be the true value will come to fruition, and we will be in a better place because gold and silver, well, they are debt killers, and that is the thing to hope for, and we can bet on in the long run. So there you have it, folks. Post your thoughts below. Interesting and fascinating story. Thanks again to Bead Demon for sharing it. And as you know, I do post videos on a daily basis, but I want to remind because some videos don't get caught or don't seem to be captured by YouTube's algorithm there. So I want to remind you that if you don't see a video from me on a daily basis, you can come back to the channel and see it there if you don't get a notification, or see it in your subscription feed if you're interested in daily news or revelations or commentary on the markets. So there you have it. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.